Good afternoon, everybody, and welcome to the final edition of ChartWatch Live for 2025. As you can see there, happy holidays, everybody. ChartWatch Live will be taking a break until January 28, 2026 for our Australian viewers. That will be the first Wednesday after Australia Day. But we have a jam-packed session for you today. Lots of offline requests, lots of really interesting case studies I want to get to that will help you understand how this model works and can work really well for you. And of course, before we do that and take your online requests, also the portfolio management model to determine how full our risk bucket should be at this point in time. Okay, let's head over first and foremost to where we do that portfolio analysis, which is here on the Nasdaq Composite. If you're trading US shares, this would determine for the money you've allocated to US trading, potentially how much of that capital you can apply to the market. And I typically work on fully invested, so you can actually invest all of your capital. I don't have a cash waiting when the market is gangbusters, and that's really sort of through this phase here. I just want to have all my cash in because the probabilities associated with the market looking like where I've set those arrows is so solid that why would you have any in cash? But as the market starts to falter and become less certain in the price action's determination of who's in control of the market, whether the demand side's in control or supply side is coming in to attack that control, grapple that control off them, create equilibrium, which is I feel where the market is right now, or potentially even supply side control. We can see lots of charts of examples of that. I'll start to reduce that risk. On the Nasdaq Composite, I think the best place for me to be is about 50-50 on this one. I don't think there's a great deal of need to be a big hero here. If you're slightly above that or slightly below that, then I think that's roughly the place to be, given the short-term trend is faltering. We can see we've got a neutral trend here. The traffic light system of the trend ribbons, green, obviously demand side control, amber, not sure, equilibrium, and the light pink, which we don't know, we have all the way over here, supply side control. Same goes for the long-term trend ribbon, and we're seeing the contrast between what the shorter-term traders are doing and what the longer-term positional investors are doing as well. And the price action isn't terrible, to be honest. A decent motive phase here, a relatively shallow pullback compared to that. But otherwise, there's just no reason, I think, based upon the last few candles, to be any more than roughly 50-50 in my opinion. Heading over to the Aussie market, and we are at, this is a tricky one. Are we at 1/3? Are we at 50-50? On this day, we were at 1/3, moved back, or flagged the move back to 50-50, and I've since put a pause on that. I've just said, look, where neutral is fine if you want to be there. There's no way we would have got there overnight. That's impossible. The market didn't give us the opportunity to do that, and given that the candles haven't followed through, I think we'll just keep the prior risk rating. So what that does, I think, is frame our analysis for the rest of this session and suggests that these are at least somewhat uncertain times for stock traders. And that's not a bad thing. There's always opportunities. Even within this, we're going to see plenty of fantastic trends today. But there are risks mounting for trend followers. And or you've heard me say many times, when markets get choppy, trend traders get chopped up. So that's why I have this portfolio management model overarching everything else I do to help keep me safe in the market. And if the market was to have something really terrible happen to it, I'd just go back to the last really big one. I'm not even going to do COVID, because there's nothing you could have done about that. That was completely out of the blue, and no trend follower would have predicted that was coming. You had a few black candles to take some risk off the table, but ultimately, would have got tagged by that. But I want to go back to the GFC, and I won't spend long, but you can see how the risk management model would have put you into a fairly neutral setting quite quickly, and then into the maximum risk setting, or the lowest exposure setting quite quickly also, and would have actually kept you out of the market for the entire GFC. So I just want to frame that, put it within that framework, because that's effectively what we're dealing with at this level here. And oops, that's today. And I've taken a few of the lines off, but wait a second. And I didn't mean to do this today, but if we look at this setup we have here, and actually we're going to talk about this as the turnaround setup, obvious reasons. The trend is turning from up to down, but let's just go back, and this is not designed to scare you, it's just designed to point out there's the pattern again, but the pattern is consistent, right, with, and look, sometimes it doesn't go down that much, and let's hope that's where we are right now. Let's hope we don't go down at all. But when you see the pattern, what do you notice? And I promise you, I didn't mean to do this, and let's go back, but let's say there, for example, and we're looking here if you're not sure where we're looking at, but compare that pattern to that pattern, which is now, and well, that was a different one. I don't even know what that one was, but I lost the slider there. I'm getting goosebumps. It is scary how accurate, I don't know if that's the right word. This is not prediction, this is identification. We're identifying a particular pattern that has a set of probabilities associated with it. So we're not predicting what's going to happen, but we're acknowledging what happens often, and therefore managing our risk appropriately. Analyse. That's the analysis. What are the trend ribbons saying? Accept the fact, if I get out here, I'm going to pay all that capital gains tax. Oh no, I don't want to do that. Or should we accept the fact that this pattern has a proper set of probabilities associated with it? And the final one is act, of course. I went a little bit off topic there, and I didn't mean to, but I hope that was useful for you, a useful exercise. What I want to do now is get into our offline requests and knock them off with speed and precision so that I can get to your online requests, which I'm sure are mounting. Mark's got SRL first. What we can do is do our checklist, and that's where we're going to start on all of these and try and come up ultimately with a score out of 10. I introduced that concept last week, where we're going to say, well, let's grade everything, and when we get to the end of it, what we need to do with that capital we can apply based upon our portfolio management model, it should become quite apparent, because they'll be close to 10, won't they? And we won't mess with the Mr. in between this week. Okay, short-term uptrend, long-term uptrend, that's the first step. The trend ribbons are there to very quickly identify what the imbalance or balance is in the short-term and long-term between demand and supply. Ultimately, that's what they must come back to, is demand, supply, who's got control. And if you see green, we say the demand side has control. Light green, short-term traders, long-term traders, dark green. That's it, move on. Don't get too caught up in it. The other thing we actually do like to do with our trend ribbons is see that they're behaving as zones of dynamic demand in an uptrend, or dynamic supply in a downtrend. We want to see the price bouncing off them. That's usually a pretty good sign. So straight away we can see excess demand, both short and long term. Move on. Don't want to spend too much time on those, because the next step is to move to our price action. We're going to draw in our peaks and troughs. Not easy here, actually. Let me start that again. Up to here, and I've taught you this several times, but just to remind you, higher highs, higher lows on the candle bars will take me up, and then only on a lower high and a lower low will I start to go down. That's an inside bar. We miss it, so we head to here, 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 here. And what we can see straight away is that the price action was quite strong heading into this move, but has since started to vibrate in quite a volatile range. This is the optimized true range here on it's OTRs, what that stands for. You can use average true range with a setting of 1. It's going to do much the same job. Obviously, I've optimized it. But it's going to tell us what is above and what is below average volatility. So we're looking for candles for price action. That's the final step, that are significant, and we can see their significance here. So it's just an objective measure of saying above or below average. We've got volume here set up in the same way where we can see above or below average volume. We can see substantially above average volume through here as a huge amount of interest. Obviously cash came into the market, but at the same time, for all of that cash coming in, there were just as many shares going out. So as many buyers that were coming in thinking this is a great time to buy, there were just as many shares saying, you know what, I've had enough, I'm out of here. So never look at volume in isolation and say strong volume means strong demand. It cannot be the case. Strong volume means strong demand and strong supply. But when we marry it back with the price action, we can speak to motivation. We can see the demand side was very, very motivated. Yes, supply was there, but the demand side was bidding higher and higher prices, and the supply side was losing control. by only letting it go at higher and higher prices as well. It's also coincident with supply removal in the market, and we do want to see this volume push into previous zones of supply. This is a zone of supply here. How do I know that's a zone of supply? Because the price went down from there, or I should say a zone of excess supply. There can be no other conclusion that we can draw. This is an absolute certainty that there was supply in this zone. Okay, and if there was supply there last time, for whatever reason, people thought that that was a good place to get out, they may be there next time. The only way to get rid of that supply and move on is to deal with them, and that's what we can see through volume. Then we get through here. I just want to get to this day here. It's big, it's black, it's supply side oriented, massive here, not so much on the volume, so a pretty average day. Nothing we're really going to get from volume on that day, but certainly demand side motivation, supply side motivation here. We tried to come back, we pushed up, and this candle here, these two work together to tell us supply is starting to come into the market in a fairly meaningful way. In fact, that one is above average. So above average demand kicking on from this move, from this first move, kicking on from here, thinking here we go again, but fought back by supply. And when this candle here is paired with this candle here, that starts to make me quite cautious. So I'm pretty sure I put SRL in on this day in my ChartWatch ASX scans. If you don't know what that means or you haven't seen them yet, that's what they are. Front and center on today's news page of Market Index, where I put them out every day. And in those, I present to you doing this analysis, exact analysis. There's nothing different. There's no secrets. Nothing's withheld. The exact analysis I teach you here creates the uptrends scan list and also a set of feature charts, which I call my high conviction uptrends list. Some of the charts, not all of them, because sometimes there are too many to put in, and then the same for the downtrends. Okay, so that just gives you a bit of an insight into where I say, well, I'm pretty sure I put it in on that day. That's where it would have gone, but I'm quite certain I haven't put it in since, and I'm quite certain I didn't put it on that day. And you can see that day actually looks pretty solid, but we can see not a lot of conviction here, not a lot of supply removal, and I know there's a lot of supply in the market. So I ascertained on this day here, there's a substantial amount of supply. It's substantially above average. I need to be on alert here. Whether that's the day you take some risk off the table, I think you're justified in doing so because of the combination of this and this, okay? So we're getting to the point now where we've done some analysis, I guess, on what the prevailing trends are. There's some probabilities associated with that, but we're also starting to do some analysis on maybe next steps, okay? Accepting the fact that supply is starting to come in here in force and potentially managing our risk on that basis. If you told me on that day, Carl, I did a little bit of this. I did a little bit of pruning on my risk. Carl, let me tell you that I had 1,000 shares before that day, and after that day I had 850. I'd say, okay, that makes a lot of sense to me. We've still got substantial exposure to this trend. Why would we have substantial exposure? Because look at everything else we've discussed. But taking a little off the table just to acknowledge the fact that supply is starting to come into the market. And on this day here, we'd be cheering it up, because we've still got 850 shares. We're saying, go you good thing, SRL, and we wouldn't really care at all that we've sold any, would we? Now, if it was to push into this supply area up here, so we have a clear, present, meaningful, substantial, these are all things we've determined objectively, not subjectively, point of supply here. Nobody can argue that. That candle at one stage, which this price action was moving up, that's the only way that shadow can form, is if the price was moving up with a white candle, mind you, at one stage on that day, and then the supply came in, decent amount too, okay? So we know the supply is there. If we can trade, we just have to trade with that supply. It doesn't mean it's the end of the world for SRL, it just means we need to trade with them now. If we're going to go to 10, we need to deal with the supply that is here at 8, and it's as simple as that. If we can deal with it, I tell you what it's going to look like. And these things must be the case. There's no other way to interpret what I'm telling you, ladies and gentlemen. If we have dealt with the supply, I tell you what, you will see a candle that looks just like that. It will probably have elevated volume, and we know because it's a big white candle, it's going to be elevated on the OTR as well. Okay, so we can complicate things by looking at various indicators, but ultimately, apart from volume, which doesn't tell us what price action is doing, price action is really the heartbeat of where demand and supply is interacting in the market. So if I see this candle here, it's happy days, hunky-dory, and if you told me On that day, Carl, I saw that candle, and guess what I did? I went back to my original 1,000 shares on that day. Yep, so I got out 150 here, and I got back 150 here, and I just kept moving. I just wanted to the next opportunity, because all I'm doing, mate, is analysing, accepting, and acting, and I don't get stressed out about the prices that I've traded at, because they are irrelevant, mate. I just need to do the right thing. And that gave me cause to get back in. Now let's hope that's what happens. If you've still got 850 shares left, that's where you want it to go. But if that's not what happens, if this is what happens instead, and I think you know where I'm going with this, we're going to be pretty happy we got those 150 shares. Okay, and this is the beauty, and this is the absolute beauty of the way I do things, if I can say so myself. That might sound like I'm a little bit full of myself, but it is a beautiful thing that I've learned that over many years, because prior to using this type of mentality, I would try and get all my shares in at the bottom and get all my shares out at the top. And if I had any doubts on that day, if I get it's such a good stock, the story's great, that where their mine is and what they're doing and the offtake agreements, and I didn't sell those shares. When I get to this point here, if I hadn't sold those shares, so when I get to this point here, I can't move the blue line any further because that candle doesn't exist yet. So let me hover there with the mouse. When I get to this point here, I'm beating myself around the head. I knew I should have sold some shares. Why didn't I do it? I should have got $7.50 and now it's $6.50. I've missed a buck. Look, it's short of bounce. It's still a short-term uptrend. It'll get back up to $7.50, and that's when I'll get some out there, no doubt about it. But let me just see how this goes for now. Can you see how the mindset has completely changed? If I haven't sold, I'm more likely to just blow my model to pieces and hang on to try and get what I should have got. If I have sold some, I go, I don't feel so bad now. Yeah, I've still got 850 shares. That's not good. But I'm in a better mindset because at least I took some action on what I knew to be a clear showing of supply side interaction. I accepted, I acted, and now I don't feel so bad here. I'm in a better mindset to just do the right thing. And if I saw that candle, guess what's going to happen here? Now, what sort of minus R would this be? I would put you, if you saw a candle that big, it might stack. Okay, they stack on top of each other. So we might come down to say 500 shares on that day. And then I'd be looking for other levels. Okay, so I'd be looking for something under here. Okay, we know that this old point of supply, well, let me tell you now, the old points of supply tend to act as points of demand. And you can see that already because on this day we bounced from the old point of supply. The old point of supply. And the more significant the point of supply is, it tends to be more significant as a point of demand. So if we've got demand, if we can see demand, it's clear as day, demand is coming in here. If we now end up in a situation where the price is down here, what has happened to that demand? By definition, it can no longer be in the market. And if they're not buying anymore, then that makes me feel pretty disturbed. Is that the right word? About the way things are going. I'm probably going to minus R the hell out of things, and I will. I mean, that I can. For me, in good conscience, I cannot still. Certainly, I couldn't be full risk position FRP. Often hear me talk about that. But I see a candle like that, I'm ZRP, which stands for zero risk position, obviously. Now, none of that has happened yet. But if we have risk on a particular trade, why wouldn't we understand the potential scenarios and prepare ourselves for where we need to act? So hopefully that satisfies your request there, Mark, on, I guess, the present analysis, a little bit about what you could have done and a little bit about what you can do. And I think that's all the model is trying to do, isn't it? Give you some clues from what is happening in demand and supply as to what maybe you can do next. I have to be careful what I say because there are no recommendations here. There are suggestions, there's teaching, and it's up to you to apply. Okay, next one is Larvotto Resources. This one's for Chris. And we could make this we can do it very complicated. We can go through a giant case study. I'm not going to do that, so don't panic. Or we could make it very simple and simply say, I have no interest here. With that short-term trend ribbon heading down and that orange, and the fact that the price is beneath it, the fact that the price has come down, tried to rally off it, because it's rallied off it pretty well in the past, but now has failed beneath it. And this trend ribbon is not only turning down, it's amber, but it's appearing to offer dynamic supply now instead of demand. straight away, if I didn't have risk on Larvotto Resources, I would move straight on. I wouldn't spend more than a second on this chart. Boom, I'm gone to the next one. Now, I'm assuming that's not why Chris has asked about this one. I'm guessing Chris is already in it, okay? Not assessing it for entry. So first point, there's no plus R here for me, and that leaves two other alternatives, because when I'm getting to my ACT part of things, I have three possibilities. I can maintain the risk I have, if I have risk on the particular trade. I can add risk, or as you've seen, we can minus risk, okay? So moving on, if I was looking at this for a plus R opportunity, bang, less than a second spent on this. And isn't that wonderful? There's 2,500 stocks on the ASX. We need to get to the next one and the next one. And I've spent less than a second to rule out, in this case, the possibility of this. So that's gone. Okay. Now, Chris has probably asked about this because he's got it. So he's more wondering, well, am I equals R or am I minus R? I can tell you that the minus R occurred a long time ago. I think we can all see that. We won't do the big case study. The question is whether there's any R left. So are we still equals R? And for me, no. Look, and again, this is very much a trading style issue, and I say this every webinar. My trading style is more short term. Okay, I want to keep my capital nimble for other opportunities, because if you watch my watch list, there's plenty of them. There's always stuff there that's moving with momentum, with double greens, with rising price action, and lots of white candles, great volume, great volatility, great relative strength comparative. Like, everything matches up. So why am I mucking around by still holding this? And that is my view of the world. You may like Larvotto Resources because it has a great fundamental story, and I don't mind that. That is your decision. I'm a ZRP, and that's all I can tell you in these webinars. I can't make stuff up and go, well, Chris, if the fundamentals are good, then you could consider. It's just not me. Okay, I don't care what the fundamentals are. I just care what demand supply is in the market. Okay, so I'm a pass on that one. I'm ZRP. I can't see a reason to have any risk on this. If I squinted, if you wanted to keep, and now we're using order of magnitudes here. Let's say you normally buy 1,000 shares is not the right way, because it depends on the price action, the price of the share, right? But let's say you put 1,000. Let's say $1,000. That's probably a better way to do it. Let's say hypothetically you normally put $1,000 on a trade. Like, we would have gone minus R, minus R, minus R, minus R on this one. And order of magnitude, if I still had 100 shares left on this, that would be the absolute most I could entertain on the basis that it's still a long-term uptrend and it's still trading above that trend. And that's order of magnitude. And sometimes for me, and I'm being honest here, sometimes I do that just on the basis, it's a small amount on it helps me with my mindset. And I know the worst case scenario here is very, very little to me now, because I've managed my risk. But if it pops back up, this is the key. This is the critical factor, ladies and gentlemen, in this little remaining 100. If it pops back up, I've still got that 100 shares, and I don't feel so bad about maybe getting out at a lower price. You know, I've still got 100 shares. It's not so bad. I'm more likely now to do the right thing if my model prescribes it to continue to add risk. We all know the feeling, that feeling of getting out too early, don't we? Oh, I never should have got out of that. I knew it was going to bounce. Look at it now. Or I can't buy it back now. If I buy it back now, it's going to go straight back down. There's the decision-making process, but then there's this risk management process as well that just makes it work. Okay, let's go to, I wasn't going to do two for anybody, but I'll do EQR on the basis that it's easy for me to do. So this is one that has appeared several times in my watch list over the last few weeks. I'm pretty sure both as a feature and irregular as well. And you can see why: double greens, rising price action, predominance of white candles, and today's a pretty good day. So on this day here, certainly I can very quickly say equals R if you've got it. You need to make your own decision. If I've got it, I would equals R. And there we go. I know there are some cowboys out there, ladies and gentlemen, that are far worse than me, aren't they? And certain regulatory authorities probably not doing a lot about them. And here I am, and we're fully licensed. And you know, I've been in the business. You can see the grey hair many, many years, and I still have to watch my P's and Q's about what I would do and what you would do. But that is the system within which we work, and we will continue to work within it. So let me say, I would be happy to equals R and plus R as well. Okay, and that's what my watch list will convey also. I want to talk about this one, and this is not a request, but I do want to discuss it because it, I think, introduces a very important concept here. Treasury Wine Estates, another, it seems, really shocking announcement today. Another profit downgrade, it seems. And can I get a surprised face emoji for everybody who was surprised by today's Treasury Wine Estate profit downgrade? Is anybody surprised? I'm looking, I'm waiting for the emojis. No, not getting any surprised face emojis, funnily enough, because there were no surprises based if you could read a chart. And you've seen me post these on my Twitter feed where I go, if only there was a way the average mum and dad investor could see something was going down the gurgler. And this is it, ladies and gentlemen. So I wanted to point that out today because there's more news on it today. It's been in my feature charts 1,000 times, and I'm not even exaggerating there. You can see as a short trade. But I do want to bring this up, given our first discussion about where the index is sitting in relation to that turnaround setup, and just remind you about the short selling aspect of things. I know it sounds like I'm banging over the head about this, but we've seen why it might be important. It's as simple as people just don't get short selling. Hey, Carl, how do I do it? Well, you've got to decide how you can do it. Options, CFDs, stock lending, I'll leave that to you. Okay, some of them are easier, some of them are harder than us. But eventually you're going to end up with two buttons on your screen, a buy and sell button, much like you always do. Now, normally what you do is you type in your 1,000 shares here and you click the buy button. Okay, that's what you normally do because you're usually buying and you want it to go up. When we're short selling, we do the same thing. We hit the 1,000, put the 1,000 shares in here, but we don't hit the buy button. We hit the sell button first. And if you have CFDs or stock lending, particularly in this example, if you can actually do this with options, you can sell options short as well. But if you hit the sell button first, your broker looks at your account and it says in your account how many TWE shares are owned, and if you're like me, you're ZRP the hell out of this thing, so you don't have any shares to start off with. But the fact you've hit sell at 1,000 means your broker goes, aha, Carl must be wanting to short TWE, so we minus 1,000 shares here, not plus 1,000, minus 1,000, which means we've opened a short. At some stage down the track, let's say I sold at $10, I sold 1,000 shares at $10, the nominal value of that trade, and it's only nominal value at this stage, is $10,000. If I was to buy it back today at $5, the nominal value of my purchase, because this is a purchase, close short, hit the buy button down the track, 1,000, buy them back at 5, the nominal value is 5,000, 10,000 start, 5,000, that's a $5,000 profit from the share price unraveling. Okay, so that's the first thing I wanted to remind you of today. I think it's absolutely critical I do that. The second thing I wanted to show you, and this is just out of interest. So what this is here is my offline database, which helps power, it's one of the sources that powers the market index broker consensus page, which I'll show you in a second how you can get this information. But I've dialed it back to the 19th of March. The 19th of March this year, okay? And what we can see, and I've deliberately grayed this out because I don't want to get sued, ladies and gentlemen, but in this column you can see was the brokers, okay? Various brokers. I'm not even going to mention their names, but you can imagine who they might be. And this is their rating. In fact, look here, this particular broker upgraded their rating on Treasury Wine Estate on the 18th of Feb from hold to buy. So this is a new buy from hold. And you see their various price targets here. Price targets 12.90, 13, 14, 16, whatever it might be, okay? And you can see how the biggest brokers in the land were placed, what they were telling their clients to do on Treasury Wine Estate all the way back to October. Isn't that interesting? And yet, when we go back to here, we can see on the 19th of March, which is this date here, okay, that's where Treasury Wine Estates was. And that's what was about to happen. Now, if you're using my model, what were you thinking? Because that's where you were. Okay, and I know this is a bit of a Carl being a bit of a smarty pants moment. Let's go here, because now we can see what the actual ChartWatch database did on it. You can see 67 times. I know I said 1,000. I was slightly out there. 67, not 1,000 times in ChartWatch downtrends. It's been 67 times. Ladies and gentlemen, the way I view these appearances is every one of these is a potential short. That's for me. It's not just a minus R, as in if I had some, I'd get out. For me, I look at this as minus R to increase my risk to the short side from 11.10 back in May 2024, preceding that move. Down to 549. It's probably going to be one in there tonight. Anyway, I wanted to talk about that one. Then we're going to do 4DX, because I think this is really interesting as well. And we go 4DX, we can see it started in January this year at 55, and it was in quite consistently. And you're going to see a little bit of a break here. So from the 9th of October, the better part of 6 weeks, it stopped appearing. And then it started appearing. So you can see these are going up 55, 60, a little bit down, 55, 70, but generally moving up each price that it was put in the watch list. And then boom, back down to 171. Let's marry this up with the chart. And then from 171, it's been appearing, very regularly as recently as this morning, and to 298. So we head back to the chart. We can see why it stopped appearing in that period between October and November, and then it started appearing on that arrow again. Okay. My model wouldn't have a clue what the underlying fundamentals are for these things. It only cares when demand is moving back in. Let me say to you, Sydney, that my opinion on 4DX is still very much that the demand side is firmly in control of the short-term and long-term price. The price action is exemplary. That is, we are seeing on these motive phases where demand side has control, large moves, and the response from the supply side is incredibly limited. Now, the normal mentality for regular investors who haven't heard anything I've had to say is, oops, that's gone up a lot, can't buy that now. Now, that's how they think. Now, the way the professionals think is not in terms of price, they think in terms of value. So they're thinking the value of this is $6. Whatever's changed recently has made the value of this $6, right? So buying now still makes a lot of sense because it's only $3. If I buy now based upon my valuation, I'm going to double my money. So they don't look at it and say, oh, it's gone up too much. They look at it and say it hasn't gone up enough. And that is a massive paradigm shift that we all need to undergo if we want to start to think like the market. It's not that has gone up too much, it is that has not gone up enough. So we can see just through the sheer lack of supply. I mean, today's the pullback. Is that the pullback day? Ladies and gentlemen, it's more than doubled in value, and it's more than doubled in value. I've got to realise where my cursor is, and that's your pullback day. So there is some profit taking in the system. People are going to want to take profits. People have got in $1.50, they've doubled their money, they're happy, and they might not be selling all of it, but they're going to sell some of it. Like we can't begrudge profit takers taking profits, but how much supply is coming to the market? Is it just profit taking? Look at the volume today. Well, we can't tell because the volume's still going, but it looks like a lower volume day, doesn't it? Bit of profit taking. I think that's what we're seeing now. Now, the candle is open. I have to say this every week. We shouldn't really do too much analysis. We really shouldn't do any analysis until the candle's closed. But I do want to illustrate, if we end up with a candle like this with that lower shadow pushing up, we might even see it continue to rally during the day, as what we're seeing is not really positional selling. What we're seeing is profit taking and positional buying to buy that dip, to soak up that supply that's coming to the market because they know the value of this is much higher. This price action, but there's also what's happening up here, ladies and gentlemen. I hope you agree with that. Is equals R. Would I plus R today? Well, I would plus R today because today doesn't exist for me, and I'm going on yesterday's candle. Yesterday's candle, I'm still a plus R. You have heard me say, in fact, we said it last week. I wish we could do, maybe there is a course we can do, a more formal course where we put these and there's headings and you can go back and I can say refer to section 6.4, okay? But we talked about this idea of, because it was asked as a question. The next day, at what point do you not get in if it's starting to pull back? Okay, and some of the things I put in, they've got great momentum, but hey, that also implies there's mean reversion. And I talked last week about this idea of the balance point. If it's trading beneath the balance point, I define that as halfway point of the candle, but it really should be halfway point of the optimized true range. Okay, and the optimized true range and the candle range are the same in this case, so the midpoint will be the same. If that didn't make sense, go back in the recording, replay it a few times, and ask AI to explain it to you, because I don't have time to explain it to you here. So I could still plus R on the basis that it's still trading above the balance point. Now, these candles are an hour in arrears, so if you're looking at a live feed and saying, well, 40x has pulled back more than that, Carl, you're all wrong. I can't see it because my candles are an hour in arrear, okay? So I think I've addressed that one for you there, Sydney. FLT has come from Charles, and this is one I've put in recently as well. And I think I put it in on this day. I won't go back to the spreadsheets, who cares? I'm pretty sure I put it on that day. I've got a feeling I might have put it in a little earlier, but that doesn't matter. As in, maybe on that day I snuck it in because anticipated is not the right word. Anticipated that it was turning the corner is not the right word. The pattern suggested that this was quite a more often than not scenario, right? Ladies and gentlemen, much like we saw the XJO chart flip it upside down, for the turnaround setup coming down, this is the turnaround setup going back up. This is a particularly powerful setup right here. So for me, yes, in keeping with everything I've done in ChartWatch scans, there's no reason for me to change that. Equals R if I had it, plus R if I didn't have it. I was looking to add some risk, and this was the best one on the day. This was the 10 out of 10 setup. I think it's a very strong setup for a turnaround setup. How does this compare to a continuation setup, which is double green all the way? Well, it doesn't. You can't compare a 10 out of 10 here, 10 out of 10 here with a 10 out of 10 there, but it is a 10 out of 10 for a continuation setup. And I like to get a good mix of the two in my portfolio. And the other one, which I've been tracking for a while now, is Domino's, and I think that's starting to turn the corner. And again, Domino's and what was the last one, Flight Centre, they're very, very different stocks, but who cares? This is not about what they do. This is about how investors perceive the value in their shares. And investors perceive value based upon the same formulas and spreadsheets at the end of the day. And companies obviously in different cycles, parts of their earnings cycle. So that, I think that's quite instructive. Now, staying on this theme of the turnaround setup, I want to go to Telix. I said I'd talk about this one in last night's evening wrap because it tanked last night. And it's been tanking for a while. It's tanking today. No surprise for anybody who's a regular listener here. Now, you can see how many times we've analysed this. So ZRP is a bit of a common theme. And if I could do anything for you, if I never tell you the next stock to buy that goes up, if I can help you avoid a Telix, then I think I've done my job. I noticed that, I put it in, I won't go to the spreadsheet, but I put it in here and I put it in all over the place. I minus R'd the hell out of this thing. But again, it's not because I knew what was going to happen next. I wouldn't have a clue. I can't tell you what's going to happen next on 4DX. Whatever is going to happen is going to happen. My job is to analyse, accept and act, manage my risk. But it's the textbook setup. Do I really need to go into the setup now? Because I think we kind of get it. Basically, let's start with the short-term trends. They're going to go, and I've drawn these arrows before, they're going to go from green to amber. They're going to go from amber to pink. The price actions are going to go from rising peaks and rising troughs to falling peaks and falling troughs. The candles are going to go from predominantly white to predominantly black, okay? We're going to start to move beneath the trend ribbons, and instead of the trend ribbons acting as dynamic demand, that is the price bouncing off them, the trend ribbons are going to impede price, okay? We're going to get to the long-term trend ribbon, and we're going to start to interact with it. And it's when I get beneath the halfway point of that long-term trend ribbon, that ding, 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 we've got less long-term trend ribbon supporting this than we do now resisting it. Can you see the logic there? Again, it's a rule. It's an objective rule. You can apply this. You can start applying this tomorrow. Carl told me that when it gets halfway beneath, halfway into that long-term trend ribbon, this is what I can do. I love objectivity. I hate subjectivity. There's a little bit of subjectivity in my model because of how big's a candle, okay? But we've got things like OTR to help us define that as well. We want to minimise subjectivity, but it's very hard unless you're a computer programmer to completely eliminate it. Okay, we're still ultimately applying a manual process here. That day there is as clear as day. You can't get any clearer. That is the market going tush, 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 tush. Something's wrong with Telix. I don't know what it is, right? But the supply side is now in control of this price. Make of that what you will. This is what the market's telling you. Make of that what you will, because I can't make you do anything you don't want to do. So that's the turnaround setup there, okay? And the rest becomes a continuation setup now, doesn't it? It's not a turnaround setup anymore. It's now a continuation setup. So let me just go ZRP over here for you, Donald, who's asked about this one. Now, actually, Donald asked about it on a weekly chart. So let me do this. And I'm going to do this because it's on the public record, but I just want to start fresh for Donald because this is super relevant. This is so good now. We've got so many people email me and they go, hey, Carl, loving what you're doing. And I'm using it on a weekly chart. I'm not a short-term trader like you, but I get what you say. I need to find my style. I'm using it on a weekly chart now. Okay, so let's see if there's anything in here on the weekly chart that could have helped us on Telix. Straight away, my eye goes here, okay? That's a big candle, big upper shadow, something's not right. And now look, these are weekly amalgamations of those 5 trading days. We can see the OTR is massive. Something's going on. Look at the volume on that day, ladies and gentlemen, please. Something big has happened on that day. And what the big things, and what's even worse is it happened after that day. So that day, decent volume, massive volatility, quite a bit of money coming in. I mean, certainly above average, cleaning out supply. Wonderful. That's all wonderful. $30, magic. We are oblivious to what's going to happen next. On that day, we're thinking, I'm holding all my risk. No reason to do anything else. Then I get that day. Then I go, okay, look at the volume. So it was heading up. It was pushing with immense demand, immense interest. But what happened to all that demand and all that interest? Guess what they got? They got everything they wanted. So it is possible on a candle like that. We're not going to do anything on that candle. Trust me. I'm not going to say that's the candle where I'm mining minus R, because I'm not minus R on that candle. But it is instructive that we need to be more attentive now, because there is a possibility, I was about to say a high probability, but there is a possibility that we've had a blow off in demand. Anybody who was waiting to buy Telix just got in. The massive volume is telling me that. Why is all that supply there? If this thing is as good as everybody thought it was up to this point, why the hell did so many sellers just pull the trigger? And it wasn't just the fact they pulled the trigger, that's down here, okay? It's the way they pulled the trigger. And the candle and the volume and the volatility are working together now to tell me that I need to be more attentive. Am I minus R on that day? No, I'm not. You say, Carl, you should have, because that's the top. Okay, well, I don't know what's going to happen next. Am I minus R on that day? No, I'm not. I want to see your thumbs up emojis. I need to look over here. Your thumbs up emojis on the candle you think you're going to minus R. Any minus R. And it could be just, Carl, I'm just going to take a precautionary measure. And I don't think that's the candle, because everything else before that is a monster. It's total demand. I know this is concerning. I know this is maybe, okay, if you did 50 of your $1,000, right? Maybe. But you see that it's order of magnitude that. That's where we're going. I want to know where you're going to pull the trigger on any. I'm watching here for your emojis. I don't think it's that candle, but I don't want to direct you. I'm going to shut up now and just do next candles. Good. No one. Good. Are we doing thumbs ups for taking risk? Are you taking risk now? Why are you taking risk off the table now? These are good candles. Okay, we'll do thumbs up for taking risk off the table, okay? I'll give you a hint. If I'm looking down, okay, I don't know who did the thumbs up. The solitary thumbs up. This is the first candle now. I'm going to just take a precautionary measure, just snip some off. And it's just a snip. Why? We have talked about this. This upward pointing shadow. We know something big happened here. So what we are now, we are super attentive. Okay, we are extra sensitive now for confirming signals that demand, I was going to say, has lost control, is losing control. This candle here is as powerful as telling me, oh, geez, I think demand's kind of lost control here. Not wholesale, but this is not good now, because we are confirming what we've got up here. So again, let's use the $1,000 analogy. I like this idea of knocking up 150 off the table. I normally deal in thirds. That's half of a third, right? That's a sixth. So let's go here. Precautionary measure. Okay. Nearly said a bad word there. And now I'm a bit annoyed I didn't knock more off the table. Thumbs up. I've just gone wall of thumbs up. Okay. Ladies and gentlemen, we're all in the camp now of knowing what the hell to do when we see something on the screen. Okay. Now, where are we now? Okay, can we do, okay, we'd like to do thumbs up, because I think, are we all here? I mean, let's do thumbs up or surprise face. So thumbs up, we're all here now, or surprise face, no, I'm still going to keep some on the table. So thumbs up, too much for me, ZRP, I'm out of here. Yeah, okay. No surprise faces. Now, if you wanted to, now I'll give you an option. Let's go copy paste. I'll give you one option here. So let's go option one. Is that one? Let's say that's option two. Is that? And there are two options, order of magnitude. Why are we maybe just keeping a bit on there? Because look, at the end of the day, this is still a ripper, right? This is still very strong, but this is a problem because there's our point of demand. Okay, that candle there has created a trough. I won't draw it in, but there's a trough there. This one confirms this one, and that's a monster, and we've closed beneath that, and the short-term trend. Remember, they're stacking. So from our 850, we're going to come down a long way, either at ZRP if you feel that way. Now, ladies and gentlemen, this is not a daily chart. This is a weekly chart. From the top, to where we are now, we can say it took 1, 2, 3, 4, 5 weeks to be all out of Telix. We got some out here, Friday, 3:30, we did our analysis, checked our portfolio, and before 4 o'clock on Friday, because that candle's going to be 99.9999% finished by that time, we got out. Why wait till Monday? Okay, and then we got the rest out here on that day. Now, we don't know what's going to happen next. Oh, on that day, do we add risk on that day? I won't ask for a show of emojis, but no, it's not enough. There's not enough just on that. I want to see at least confirmation. I want to see rising peaks and rising troughs. I want to see the demand side really come back in force here. And that's starting to look good now. Okay, don't have another higher peak. That's starting to look very good. That's not looking so good. That's still not looking good. And I think if you're holding your 100 shares, where's that last 100 coming out? Probably there. Another close beneath the short-term trend ribbon, another upward pointing shadow, two more peaks. And I think by then, we're pretty much gone, okay? And it can show you, it can fight back hard once the tide turns. And if it got back up here, I would happily add risk to it. Because think of the feat it would be to overcome what it had done. I would happily add risk. So, look, it took us 5 weeks to get out, or 6 weeks, whatever it was, and maybe we got out at an average price of 25, give or take. Do you think we care now? That we didn't get the top, did we? We didn't get the top. Got out 5 weeks late, but we don't care, okay? And ladies and gentlemen, I ask you, was that any different from any of the analysis we do on any of the daily charts here? Now, on the daily chart, you can see probably, well, we're pretty close to ZRP, somewhere around here, aren't we? In fact, not that much better, because this pullback was so sharp. And that was that big warning candle we saw with the big volume. It takes a week now, right? Not too much of a better price. I think the sensitivity of the weekly chart there wasn't bad compared to the daily chart. Now, if you're using a weekly chart, remember I say use one, don't use both. You know, pick one that suits your style and stick to it. It's not that, I don't think there's a huge amount of sensitivity difference there, but at least you've got a path on which you can see it works just the same. And the moving averages do the same thing. The trend ribbons do the same thing. There you go. So ALA, and the good news is that we've done all this work. We don't need to spend a lot of time on this. And I don't mean to disrespect anybody's wishes or desires or holdings, because I'm sure Michelle would love me to come and say, Michelle, this is a cracker. This is the best stock on the ASX, and you are totally justified in your belligerence in hanging on to it until grim death. But I can't do that. All I can say is, Michelle, all I can see is not a lot of interest and not a lot of desire to own this one. I can see quite a lot of desire not to own it as much as possible. And therefore, for me, it's a ZRP proposition. So not only would I not have it, I'm not interested in owning any of it anytime soon. So we can move pretty quickly through these, as you can see, and try and get as many done. Now, this is super interesting. The banks have got me totally confounded right now by the banks. Let's do a quick look. ANZ. There's still holding this here, isn't it? Still holding this. Well, I should actually draw the long-term trend ribbon. But this is a problem. I wonder what that looks like on the weekly chart. I'm going to break my rules. But hey, it's interesting, isn't it, in that we've probably got more people here who are viewing the banks as a long-term self-managed super fund sort of thing than who's trading banks, right? So maybe this is the best place to look at it. Or maybe it's not, because you're going, oops, I really didn't want to see that. I wish I could unsee that. Because based upon what we saw on Telix, and we got above average, look, it's not massive, but it's decent, and it's very decent here, and it's very decent here in terms of the supply side showing follow through here. And what are we doing? Much like Telix, things don't go down a straight line, but there's just that natural still habit of the market to buy what was a good trend. And this week could be really interesting. This candle is not closed. We're only Wednesday. But if that upper shadow persists into Friday, this could start to look really interesting here for managing some risk. Okay, maybe that is enough to do to take a little snippet off the table Okay, I'm not going to do the daily chart. I don't think we need to. I think that's super interesting. I know nobody asked about this one, but you asked about NAB, so let's go there next. And I'm going to get rid of these studies because they all get scrunched up. But very similar, isn't it? Very similar here. And I trust you to go do the analysis on the daily chart. What would I be on this? I wouldn't be FRP. So let's just say not FRP, which is 100% invested. And I think that says a lot in itself. Not FRP, but certainly not ZRP either. Look, I'm not adding risk. So at this stage, I could equals R on what I've got. I think that's quite logical. And I'm monitoring potentially for, let's just go minus R question mark. Okay. To get to an add R, it's going to have to put another little higher trough in here. Show me that it's treating the ribbon as demand again. And we didn't see that on Telix. A nice little trough showing the ribbons back to demand. Nice white candle closing. I'm going to say at least above 44 into this zone. I don't need to see a breakout. Breakouts, things are too late by then. But just that there's strong signals in price action, volatility, volume that supply has been met at least or contended with. And then I could go plus up. But we're not there yet, so let's keep moving. Let's do CBA because, okay, what do we notice about CBA compared to the other two? We're on a weekly chart, ladies and gentlemen. Please do not forget that. We're on a weekly chart here. Okay, can I see a thumbs up of people who would still be FRP? Thumbs up FRP or not FRP on CBA right now. This is Australia's biggest stock. It's in 99% of people's portfolios. Look at all those. So not a single person has said, yep, I need to be FRP on this. Now, I'm not telling you what to do. I'm just telling you what the model says. What about Westpac? Well, that's the best one, isn't it? That's the best of the lot, but it's not without some problems here, okay? And what's interesting is that if together these four stocks, because they are so darn crucial for the market, together, if they're looking a bit iffy, what does it mean, ladies and gentlemen, for where we started this conversation about there's the XJO on the weekly chart, moving beneath the short-term trend ribbon, coming back, and if this week continues on its path, potentially now treating that short-term trend ribbon as an area of supply. Super interesting. This, I reckon, is the best session we've done so far because we're learning some really interesting things about the market as well. Let's keep moving. Dennis saying thank you for all the work you do free of charge. It's an absolute pleasure. My payoff is the wonderful feedback I get from you all. Could you give me your thoughts on SGM or MIN? Can I go for the Y? They're both pretty decent charts, to be fair. Okay, let's do them super quick. We're on a weekly. Let's go back to daily. Decent chart, isn't it? Decent chart, certainly equals R. Actually, not far from plus R. If today's candles holds, I can't see any reason why you couldn't even go plus R on that one. Why? Because I've taught you about everything else. It's looking pretty good. What was the other one? I've forgotten straight away. SGM, pretty good as well. And we'll just say excellent, if not just for these last couple of candles. I guess that gets downgraded from, on this candle here, it's close to 10 out of 10. It's brilliant. Maybe that brings it down a half a point, that upper shadow, but very good there. And just a couple, if it's at 9.5, 9.25, 9, that's where we're talking. So it's still good, right? Happy with that one. Certainly equals R, that's without question. Where would I start to be concerned about it? Well, this big candle here is where demand came back in. Decent volume down the bottom, you can see, so decent demand. Maybe that little lower shadow as well, that's a decent volume day, and even that one there. Look, there's an area here which has consistently been a point of excess demand. If we're beneath that area, what does it tell you about where that demand, how that demand is fared? It's been dealt with. It's been consumed by the supply side. So I'd be a little bit worried about it down there, but fine in the meantime. Let's go. Atishka's got WBT. I actually almost put this in last night. But today, starting to look half decent again. Certainly that's the candle that has caught my attention. Volume's back to sort of average there after being very quiet. So elevated interest is what we're seeing on a relative basis. We're starting to move back into rising peaks and rising troughs. So yes, there is excess demand in the short term. But the reason why I didn't put it in yesterday, I'm just questioning how strong it is. How strong it is relative to the supply that is no doubt in the system up here. And it's no doubt for me, probably still lurking up there. If we get back up to it, there's going to be a bunch of traders, and particularly when you see the big blow-offs like that, there's a huge amount of traders that are stuck in it that didn't get out. They don't know my model. All they know is that Weebit went down and they can't sell when it goes down. They can only sell at the top, right? So they're waiting for it to get back to their perception of what is the top so they can sell. And that's what we call latent supply. And then on top of those, you've got the people who sold it for whatever reason they needed to sell last time and going, well, this is good value again to get out. So I held it back. Today's candle suggests that was probably the right call. And you can see there is clearly some subjectivity here. Because you could argue, Carl, it's meeting your criteria. It's more of a continuation turnaround setup, isn't it? Continuation, and there are hybrids in between the two. Continuation, turnaround. Okay. Short-term uptrend, long-term uptrend, rising price, all the stuff I've taught you. Decent candle. Back to predominance of white candles. But we can see the overlap in the price action as well. I mean, strong price action, you've heard me tell you this before. Strong action has nice separation. You know, strong motive phases, shallow pullbacks. And I think there was enough there to bring it down. So, you know, it's maybe a 7 out of 10? I think that's a good description of this one. 7 out of 10 and therefore didn't make the list. But if I had a 7 out of 10 hurdle, it would have made the list, if you know what I mean. Look, certainly I can get to the conclusion that if I had it, I don't have it, but if I had it, I'd be at an equals R. I'm just questioning whether I need to add risk. Give me one more strong white candle, I could do it. But even then, that's going to put me back in the shadow of this. And I'm concerned about this. Remember, I want easy trades. And this one is looking a bit hard for me. But everyone's a great case study, isn't it? To be fair, we can't not do Droneshield. Is that fair to say? Look, it's starting to turn around as well. It's still a bit early for me. I could certainly entertain it if it starts to do something like this. Okay, and that's where I'm going to leave this one. It's still too early. You know, I want to see it traded back above the long-term trend ribbon, or at least in the top half of it. I want to see a little dink. I call it that's the technical term, ladies and gentlemen. Ask ChatGPT about the dink in technical analysis, and it'll say, "Oh, I don't know what that is." It's my technical term for a bit of a dink in the price to tell me that the long-term trend ribbon is again acting as an area of demand. And it's it's sort of $2.50 right now. It might be $3 by the time I get that. I'm going to happily give up 50 cents on the basis that my probability of actually making some money out of it will be substantially improved. I could go. Look, I'm squinting here. I'm really squinting. If I don't have it, there's no way. There's no way I could own it. But let's go on a squint. Equals R. If you had it, then you could consider it on that basis, on the basis that it's starting to improve. These two candles here are the key. I think they're really important. They certainly, maybe I don't need to squint too much. Okay, but look at today's candle. It's when you're dealing with these turnaround setups, risk levels go up, don't they? All right, let's keep going. EOS for Wayne, which has been in the list. I put it in on this day here, and I put it on that day there, and it's actually looking pretty good. I mean, this thing's gone from 450 to 750 with a bullet, and it has not pulled. It's not pulling back. It's just hanging up there. So that's very strong for me. Strong upward moves with very little to no pullbacks. That's every day of the week. I'm going to keep an eye. I'm looking to add risk at some stage on this. Let's go to Ken, who's got IMB, and then I'm going to scroll down the bottom of the list and work on some of those and work my way up. Not a lot I can do on this one, Ken. It's not awful. You can see, I mean, if we had to score this out of 10, everybody, what would we be at? 5 out of 10? Because it's almost perfect equilibrium, isn't it? Between demand and supply. So there's some good stuff happening, like this last little pop's interesting, bit of volume coming in, but clearly until it's demonstrating substantially more demand than supply. Yeah. And if this is your favourite stock, I apologise. I know I don't need to apologise, but I feel bad sometimes saying I have absolutely no interest in this stock whatsoever. But at the same time, I'll be the most interested person in the world if it gets to 70 cents. It's just the way it is. Okay, as I said, scroll down the bottom and we'll do 5 to finish for the WR1. If I could type it in, there it is. This is for Ian. Ian, I think this looks very, very solid indeed. I want to say that I started running it in my list on that day there. I also put it on that day there and I put it on that day there. So around 30 cents. It's now around 40 cents. Not bad. And why? Why did I do it? Today's theme, ladies and gentlemen, is the turnaround setup. Okay, we've looked at turnaround setups going from uptrend through equilibrium, through downtrend, and we've looked at so many that are downtrend, equilibrium to uptrend. I cannot even contemplate plus R in here. And this part of my model, this setup, is gold, ladies and gentlemen, because it keeps me safe. It keeps me safe all this time when everyone all over social media, the chat rooms, everything is saying, oh, that's cheap. It's cheap, can't go any lower. Lithium's going to bounce. You should buy it now. If you buy it now, you will get it. Don't buy it now. You've got to get some. It's great. It's going up. It's going to be 10 bagger. And all that rubbish that you hear. Here I am, safe and secure, away from all of that BS, knowing that when it starts to go up, I'm going to see it. I'll know. The market will tell me when I need to be interested. I'm still not interested, not interested. Oh, a little bit interesting. A little bit interesting. Is it above the halfway point of my ribbon? No, not yet. Oh, pretty interesting. Bit of a short-term uptrend. Okay, nothing to see there. Lucky I've got my trend ribbon. Okay, it's interesting again. Oh, interesting. Oh. Now it's super interesting, and that's where I put it in. Okay, where the long-term trend ribbon, all right, is now behaving as a zone of demand. You can see it clear as day. Happy with that one. Plus R equals R. Again, ladies and gentlemen, I keep going back to the watch this are exactly where I do this for you every day of the week for free. Let's go. We've got 4 left, and Peter, I'll do yours after session. PLS for Claude. Worth doing PLS because we're starting to see a little bit of equilibrium creep in here. It's not panic stations at all, but we're just seeing a bit of sideways movement, that's all. The short-term trend is still very strong. The long-term trend is still very strong. And it's a bit mixed on the candles. The price action's got a bit mixed. But as long as we're above the short-term trend ribbon, and as long as we're above here, I think also, then I think we're okay. So look, I'm definitely an equals R here. Happy to go back. Happy to go back to plus R on this one. That's where I'm thinking next, not minus R, but I've given you the minus R levels on the next demand side candle. That's what NDSC stands for. I want to see a nice, strong, emphatic candle, preferably, I think, closing above 420. I think that's looking like the level for me. And then I can add some risk on. I still think this one's very solid, but obviously I've got reason to monitor it more closely. We're getting quite a few lithium stocks. This is the third one in a row. I'm not, trying to muscle lithium in, but Peter's got that one. And Peter, I'm going to spend very little time on this. 4 out of 10, 3 out of 10, and I think we can keep moving on that one. Sorry if it's your favourite stock in the world. Westgold for Heather. Hello, Heather. WGX. I think I've got 2 left after this. A little bit like Pilbara Minerals, isn't it? Very, very strong. I think we're still, our 1,000 share analogy, I think we're still intact there, aren't we, Heather? I don't think there's we haven't seen anything so sinister in here to tell us to even snip it. No, I'm still very much FRP here. Today's candle is good. When we want to see this candle close the way it is with that nice high close, downward pointing shadow, it tells me the short-term trend ribbon is still acting as a zone of dynamic demand. This is still very good. Candle's a little bit mixed, a little bit sideways, but nothing goes up in a straight line. So I think the demand side is doing a good job of dealing with some of the supply that's in the system, and therefore happily equals R, and still plus R if we get on the next demand side candle, and we're pretty close to the high, so I don't think I need to give you a price on that. Any demand side candle will suffice. Did I say 3 to go? Let's go to Fidel, who's got CU6. Clarity Pharmaceuticals, today's it's a super interesting day. It's a decent white candle, but it's not closed. But it is only one candle in what is otherwise a concerning technical backdrop. This is the market saying we don't have a lot of interest right now in CU6, and without that interest, it's hard to see something going on. However, having said that, it's got a track record of it announces something because it's a biotech stock, and then all of a sudden there's plenty of interest. This is so consistent. This move here is so consistent. It is so in keeping with a stock that's in distribution of insiders, okay, and motivated fund managers who probably got in very early, just getting out no matter what. And then there's a bit of good news that kind of turns the rest of the market to allow the rest of the market just to, I guess, sustain that supply and maybe overwhelm it for a period of time, and then whatever the bad news comes in it, and it's just so consistent. I just cannot trust stocks where I see so many black candles in a row. These are programmed, these are motivated, programmed, and deliberate sell orders in the system. And in addition to all the other stuff in my model, that's a pass for me. I think I said I've got 2 left, and we are doing a bit of a lithium by default, but they're good charts. So this one, I want to say I put it in on this day here at 4 cents, and now it's 9 cents. Whoop-de-doo, aren't I clever? But I also put it on that day. I'm pretty sure I put it on that day, but definitely put it on that day. I put it on that day. I put it in on that day. I put it on that day, and you can go check these because I know my model. I know what candles require me putting it in, and if today's candle holds, it will go in today as well. So I don't know where it's going to go next, just as much, ladies and gentlemen, as I didn't have a bloody clue where it was going on this day here. I had no idea. But I know there's a probability associated with, ladies and gentlemen, my turnaround setup, which is, my gosh, look at my long-term trend ribbon. Why do you want to muck around with my long-term trend ribbon, ladies and gentlemen? Really, I implore you. Why take the risk of not accepting what my long-term trend ribbon is telling you? I don't know. 360 is a good place for us to end today because I have no more words for you, ladies and gentlemen. That's it for 2025. You can make your own decisions, and you can make your own decisions until when we come back. Thank you for watching. That's it for 2025. I hope you loved the content. I loved sharing the time with you. But there's still so much to learn. And hey, even if you have learned it all, there's more to reinforce, isn't it? And really concrete into our brains. Next webinar, as I said, is Wednesday, January 28, 2026. Hey, if you want my trend ribbons, I am providing them to the public for free on TradingView. It's the only place I'm doing it, but it's the only place I can lock down the code because there's some intellectual property in there, obviously, that makes them change colours, and the changing of the colours is kind of the critical factor. Follow the link in the description below the recording of this session if you're watching on YouTube. Please don't fill it out 10 times because you don't have access within 5 minutes. I'll get to it in good time, okay? And then you'll get an email once you've got it. It's all automated. Fill in the form. It'll take care of itself, okay? Make sure you put your name in. Some people leave the name blank or they put in like capital N. You don't get ribbons. I delete your request, okay? It's a common courtesy. You need to tell me who you are. Otherwise, thank you for watching. We will be back soon. Hit the subscribe button if you are watching on YouTube, just to stay tuned for my other webinars. And yeah, I think maybe we do need a bit of a course or something more substantial there to refer to. And hit the thumbs up button so it lets me know you like what I'm doing. Ladies and gentlemen, it has been an absolute pleasure chatting with you today and throughout the year. Hopefully you've enjoyed the content. Hopefully you've learned a bit along the way, and hopefully it is working for you. All the best for the upcoming holiday period. And until we catch up again, bye-bye for now.